Hey everybody, we're back. Another video for you guys. It is Sunday night, Monday morning, and just looking at the charts a little bit, checking out the cues. But today we just want to go over not treating trading as a business. It's very important that you treat trading like a company. Every dollar is an employee that has one job, and that job is to go out there and make money for the company. So there's a difference between attempting to be a full-time trader and being a casual trader, or even someone who has another career or considers themselves an active trader. Some of the mistakes also apply to the casual and active trader. However, this mistake mainly applies to the person who wants to trade full-time. There are a few common concepts that we want to go over about not treating trading as a business. This mistake illustrates the common theme that there are no barriers to entry to become a full-time trader. So practically anyone who wants to be a trader can do it. All they need is enough money to open a brokerage account or trading account at a proprietary trading firm. Many people attempt to become full-time traders because they think it's easy. Maybe they bought a stock and it immediately went up. That would lead the person to think, wow, that was easy. I bought that stock, made as much money on that trade as I did working a whole job, and I didn't really do anything except log onto my computer and press a few buttons. What if tomorrow I do 2 trades? We see this a lot after a sustained up move in the market. Since 95% of all retail trades are long trades, casual and active traders are profitable on a high percentage of trades since all stocks are going up. This leads them to the wrong conclusion that trading is easy. It then leads them to attempting to trade full time. Don't confuse brains with the bull market. So however, trading isn't easy, and 80 to 90% of traders fail. A reason for this is because they don't treat trading as a business. Traders must approach their career the same way as if they were opening a business or starting a new job. Traders must realize that trading isn't a 9:30 a.m. to 4 p.m. job. Many people are attracted to trading because they like the hours. Depending on where you live in the U.S., finishing the workday at 4 p.m. or even 1 p.m., depending on your time zone, is very tempting. However, there's much more to trading than just participating during times when the market is open. Traders must be willing to put in additional time to be prepared for the trading day. There are numerous tasks a trader must do outside of trading hours to be a successful trader. First, traders need to have a plan before they start full time, the same way a person would never open a business before they have a business plan. A trader shouldn't attempt to trade full time without a plan. The most important piece of the trader's business plan is having a strategy that has been rigorously tested using a real-time data demo. Besides a profitable strategy, there are many other important components to a trader's business plan. Traders must analyze their financial situation and determine if they have the resources to launch a trading career. You would never open a business if you only had a few months of reserves in the bank in case of a break-even or losing stretch. A trader without adequate reserves will find themselves in a position of trading underfunded. So, a potential trader needs to examine if his account size is able to generate the appropriate income that he needs. Just because a trading strategy is profitable isn't enough. A trader needs to be realistic and calculate an average profit per share per trade and number of trades executed. This will be determined during your strategy building period while paper trading. If your strategy is routinely finding profitable trades that produce enough income for you, then you can proceed. If not, you shouldn't even start trading full time. A person would never start a business if they knew going in it wasn't going to be profitable enough for them. Nor would a person accept a job if they knew the salary wouldn't cover their monthly expenses. So you should have a separate page for each trading day and kept in a binder. Each log should have the following columns. 1, you want to have a time of entry. You want to have a stock symbol. You want to have your entry price. You want to have your profit target. You should have a profit target before entering any trade. You want to have your stop price, just in case the downside before entering the trade. You want to know that. And you want to have the actual exit price. So while you initiated the position, this should be done as close to the time you initiated the trade as possible. And post-trade observation, this should be done as close to exiting the trade as possible. And don't cheat on this. Make sure you complete the log for every trade as soon as possible after the trade. Don't try to recreate it after the fact based on your history. It's not enough to just keep your log. You must review your log often. I would recommend not reviewing right after the market closes. Give yourself a few hours to clear your head after the trading day. Review profitable and losing days and trades. Don't concentrate more on any type of trade, winning or losing. They are all important. Look for any patterns that may be evident. You need to review losing trades to see what went wrong. Just because a trade was negative doesn't mean you did something wrong. You can't make money on every trade, but you want to make sure that the reason you entered the trade was consistent with your strategy. So for your winning trades, review to make sure you entered the trade for the correct reason. Just because you made a profit on a trade doesn't mean it was a trade you should have been in. Don't confuse brains with the bull market. Another way that you must treat trading like a business is by doing prep work. A restaurant might start serving customers at 11 a.m. for lunch, but the prep cooks were in the restaurant hours earlier, getting everything prepared for the day. A store might open at 9 a.m. However, employees get there much earlier to make sure shelves are stocked. Just like these businesses spend time outside of regular business hours preparing for their business day, a trader needs to prep as well. As part of our risk management, I'm able to see which traders are logged on to our trading platform. I'm always amazed at the flurry of traders that log on at 9:25 a.m., 5 minutes before the market opens. This tells me that these traders probably did no prep work before the opening bell. Prep work should consist of identifying the stocks that will be on your radar for the day. This might include scanning charts if the trader bases their trades on technical analysis, or reviewing data if the trader derives trade ideas from analytic software. However, a trader arrives at their ideas, they should have a list of stocks ready to potentially trade. Next, a trader must start the trading day in a peak mental state. This means not trading while sick, hungover, or overly tired. You wouldn't show up for work with a 102-degree temperature, and you shouldn't attempt to trade in that condition either. So one of the advantages of being a trader is that you are your own boss. Trading isn't physically demanding, but it's extremely mentally and psychologically demanding. So your head has to be in the game. If you can't give it your all, take the day off. The market will be open the next day. So if you're trading from home and have roommates or family members that'll be at home during trading hours, make sure your trading space is a distraction-free zone. Have a designated trading space that allows you privacy and ensures that you won't be interrupted. Whether this is in a basement, the study, even a bedroom, a trader can't have people walking in and bothering them while trading. Make sure people understand and respect that you're working, not just sitting around surfing the internet. And lastly, like all successful businesses, make sure you reinvest back into your business. This means acquiring the tools of the trade to be a profitable trader. Make sure you have the proper hardware and data connections. Don't forget to have a backup internet provider, even if it's a slow connection. Any connection is better than none. A backup is needed to at least get you back online to flatten your positions. And don't be afraid to spend money on charting software or other analytic services. Please. So, just a quick story I want to sum up. So we have Jim. And Jim finished college in the fall of 2009, and like a lot of graduates that year, had a difficult time finding a job. And since he obtained a degree in finance and was always following the stock market, he decided to be a trader. He convinced his dad to loan him $20,000 to fund a trading account. The only demand his dad made was for him to take his new venture seriously. The first thing Jim did was get business card printed with his name and position of equity trader. He even had a fancy corporate logo designed for his business cards, envelopes, and stationery. He bought a brand new computer with the best graphics card and a dual monitor setup. Finally, he bought 10 books on trading and spent the next month reading them and developing the strategy. So over the next 2 months, Jim lost almost half of his account. He called one morning right before the market opened and said, "I had no idea trading would be this hard. What am I doing wrong?" I recommended that he should stop trading and really review all of his trading logs to see what he might be doing wrong. His response was, "I don't keep any logs." I then asked him what stocks he had on his watch list for today, and his answer was, "I'm not sure. I haven't started my scans yet." So Jim obviously didn't treat his trading like a business. Just because he spent the money on business cards and a new computer doesn't mean he was doing all the right things to be successful. Spending money on computers and unnecessary business cards is easy. The hard work is the hours spent doing the prep work required to be profitable. So trading for a living is a business and must be treated as such. Don't make the mistake of thinking you could show up 5 minutes before the open and be done for the day at the closing bell. Have a business plan, prepare for the day, and review your performance using the trade log found in our free mini course. You can get one. Free trading plan is in the mini course. It's an Excel sheet. It's perfect for you. I would suggest enrolling in this free mini course. It will definitely help you in your trading, guaranteed. So I'm gonna get some sleep. I hope everybody enjoyed this video. Hope you enjoyed this story. And any questions, email me at support@privateprofitstrading.com. Happy trading.